Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bearish closing Black Maribosa and second bearish Black Crow yesterday as the market continues its pullback from peaking at the 2019 high at 115.70, and I suppose also from the bright red neckline extension of the August to September 2020 head and shoulders top, currently at 114.68, as well as just above it, plus the congestion area between 114.82 to 114.95, made up from the January 22 high at 114.82 and the February 22 high at 114.95. This had been a new high and higher close not seen since November 2021. Now overhead beyond the 2019 high, we have the November 2020 low at 116.02, then the 2023 based upper bull channel line currently at 116.43, and the lower bull channel line currently at 117.04. They cross over, by the way, but that's another story. And in between, the October 2021 high at 116.92. I still think it might be reasonable to regard the April action as a potential bullish half hesitation for a possible topside target X, now in the 117.25 area. Now looking below, we have the July 23 high at 112.76, and then the 2024 high at in September of last year at 112.13. Finally, as I've said previously and repeatedly, we are now set up with just 4 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between, it would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one. Now so far today, a reactionary move back up from the open, but not yet reaching the significant overhead June 2020 high at 114.22. Cable, aka sterling against the US dollar. A bearish opening Black Maribosa yesterday and second bearish Black Crow after the previous session's immediate countering bearish Harami and bearish closing Black Maribosa, which made up part of the pipe top seen earlier this week. Prices dropped down through the purple neckline, currently at 132.93 of the small but influential mid-November to early December 24 reverse head and shoulders continuation pattern. Now this neckline capped the market 3 weeks ago and tried to do the same last week, but was unable to do so. Prices also pierced but closed within the Fibonacci and market high based congestion support area between 132.46 to 132.98, closing below the March 22 high at 132.98 and the August 24 high at 132.65, and piercing but failing to close under the 61.8% Fibonacci line of the June 16 to September 22 move at 132.46. Okay, so I've repeatedly asked you to keep an eye overhead at the September 2024 high at 134.34. The reason being that if prices exceed that level, and they came awfully close to doing that earlier this week, but if they did, then we would have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. This pattern has already happened in Euro-dollar, but not here, not yet. Beyond the September last year high, we have the September 2020 high at 134.83 and the 2019 high at 135.16, which are part of a congestion area between 134.83 to 136.43, containing congestion at 135.81, 136.21, and the February high at 136.43. That's the February 22 high. Meanwhile, below we have the congestion zone between 131.33 to 131.44, made up from the December 2020 low and the July 23 low as well, respectively. Though I do not know how good a support this would be on any move, the July 23 high. Though I do not know how good a support this would be on any move lower, you'd probably need to look at the March-based congestion between 128.5 and 130.5 to see something substantial. Now so far today, a reactionary move higher based on the 61.8% Fibonacci line and through the August last year high and just over the purple neckline and March 22 high. US dollar against the Japanese yen. A bullish open and close white Maribosa and second bullish white soldier yesterday after the previous sessions, a bullish piercing line pattern and bullish closing white Maribosa combination. Prices punched back and closed over the August 24 low at 141.66, with below the broken pink upper trend line currently at 140.72 of the well highlighted early February to late March descending wedge pattern, and the dark blue neckline extension for the August to October 24 reverse head and shoulders bottom, and that's currently at 140.84, plus the significant 38.2% Fibonacci line of the January 23 to July 24 move at 140.48. Now this 38.2% Fibonacci line held up the market back in September of last year on a closing basis and looks like to be trying to do the same this time. We also have just below this the pink lower trend line currently at 139.74 before we reach the September last year low at 139.55. Overall, the market remains within the larger big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork, with the bright red upper time above currently at 148.93 and the middle time below currently at 133.64. This pitchfork has shown and continues to show the bearish angle attack of this market. However, there's also another pattern or potential pattern I'd like to discuss, and that's to regard the whole February to date action, possibly even the whole January to date action, as a possible descending expanding wedge pattern, with the bright red upper time making the upper trend line and the pink lower trend line making up the lower trend line. Meanwhile overhead, well, we have the 50% Fibonacci line of the January 23 to July 24 move at 144.58, but really nothing beyond this until the lesser Fibonacci line at 146.69 and the March low that's based around it. Now, so far today, a reactionary move back down from the open, not really approaching the August 2024 low as yet. US dollar against the CNH, the offshore Chinese yuan. A bearish black Maribosa capped on the open just around the July 24 high at 731.13 and supported by the combination of flatlining green short medium moving average currently at 727.70 and the purple lower time currently at 727.92, punching and closing below the flatlining mauve medium moving average currently at 728.96. Above the July high, some distance higher, we have the congestion area between 734.41 to 734.96, containing the October 23 high at 734.75 and the August 23 high at 734.96. Okay, so I recently drew a pair of pitchforks to the same move, something I do not usually like doing, as I prefer one or the other. Nevertheless, I had a bright green lower time for the bullish Andrews pitchfork and a little lower down the purple lower time for the shallower bullish shift pitchfork. Both these pitchfork patterns were for the same action, the late September 24 to mid-March 25 move. Now previously I'd stated that I favoured the bright green bullish Andrews pitchfork to show the bullish angle of attack. Now recently, well, I'd become somewhat disenchanted with the green bullish Andrews pitchfork, and after today I will retire it and instead concentrate on the purple tines of the shallower bullish shift pitchfork. Now, so far today, a reactionary move back up over the mauve medium moving average, but not strong enough to reach up to the July 2024 high as yet. US dollar against the Brazilian real. A hammer pattern yesterday. That's usually regarded as a bullish reversal pattern, though it was still a fourth bearish black crow as well, coming after the previous session's bearish opening black Maribosa. Prices dropped down to the dark blue lower time, currently at 565.86, before pulling higher. Overhead, we have the combination of flatlining green short medium moving average, currently at 577.32, and a gold very slowly rising long moving average, currently at 577.11, that are both just over the December 2021 high at 575.78. Looking below, we have the seemingly significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07, as well as the purple May 24 today uptrend currently at 562.78, and the bright red lower time currently at 561.21. That's just ahead of this month's low at 558.91. So overall, I've drawn a pair of bullish patterns here for the same action, the mid-August to very early April 25 move. Something I do not like doing. You see, I'm an either-or type person in this regard, but I'm not sure which works better. So we have a dark blue bullish Andrews pitchfork and a bright red bullish shift pitchfork. However, given yesterday's actions, I'm slightly swaying towards the dark blue bullish Andrews pitchfork over the bright red bullish shift pitchfork right now. There is also one other key outstanding feature that is still in development. We are set up for a possible monthly key reversal here. Thus, if we close on Wednesday, the 30th of April, either over 588.52 or under 584.10, there won't be on. Anything in between will have a lesser outside month pattern. US dollar against the Mexican peso. An indecisive doji crossed yesterday after the previous session's bearish black crow. It was nevertheless the lowest low seen since October last year. Overhead, we have the significant congestion zone between 1987.96 to 1991.31, capped a little further by the slowly rising gold long moving average, currently at 1997.17. Whilst further below, we have supports at 1940.68 down to 1936.27, and between 1915.03 down up to 1920.38. The latter made up from the 50% Fibonacci line of the November 20 to April 24 move and the March 2020 low, respectively. Now looking overhead, we have a very wide congestion band centered roughly on the September 2020 high at 2057.65, stretching roughly between 2017.20 up to around the 2083 even area. The recent actions here have set up the conditions for April to possibly become a monthly key reversal. Thus, if we close on Wednesday, the 30th of April, either over 2053.10 or under 2045.80, then we'll be on. Anything in between will have a lesser outside month pattern. And so far today, well, we're roughly either side of yesterday's close right now, so nothing to report necessarily.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.